another Monday, another 19th, another crash. Let's take a look at history. I was able to observe some very interesting facts that I was wanting to share with you guys. Do you know what happened on October 5th, 1987? The answer is Alan Greenspan was just recently elected as a Fed chairman, and he was given his first testimony on October 5th, 1987. Shortly after, we all know what has happened. Roughly a couple of weeks later, the biggest crash, we all know what happened. The crash of 1987 took place on Monday, the 19th in October. Now, fast forward 31 years later, Jay Powell gives his first ever testimony in front of Congress on February 27th, 2018. Will the history repeat itself again? Just a few weeks later, Monday, the 19th, in March, the markets are tanking severely today. This is where we're at right now for the day, and of course we're not through for the day yet, and the declines are nowhere as significant as they were, of course, in 1987, but I just couldn't ignore the coincidence and the parallel between Greenspan giving his first testimony and the market significantly crashing just a couple of weeks later, and Jay Powell giving his first testimony and the markets are going down. And who knows, this may be just the first down day. The Dow is down almost 400 points, so the stocks are falling on much greater volume. But interesting fact to notice that all of a sudden, it's the FANG stocks, everybody's favorite stocks that have fallen. Look at this, Facebook. I don't believe I have ever seen Facebook falling by $13 on any given day throughout the history of trading Facebook. So, and it is actually doing it today, which is quite notable that it is doing it on on Monday, the 19th. Now, let's take a look at some other FANG stocks here real quick. Google, down 40 bucks. And look at this, gap down for the day, and it just keeps moving lower and lower. The question is, could this be the sign of where all the FANG stocks are finally turning around and heading significantly lower from here? Amazon, down 40 bucks for the day. But look, where everybody was raising the price targets when it was trading around the 1600 level just a week ago, we were put in positions, short positions on Amazon over the last couple of weeks, and they're finally going our way and they're paying off. But, it is very interesting that as a lot of analysts were significantly, increasingly bullish on all the FANG stocks, that it turned out to be a perfect time to open your short positions. Now, and last of the FANG stock, but not the least, Apple. On March 16th, I have actually posted a video showing a simple put option strategy, how to buy a put and how to literally have 100-200% gain in a few days. Shortly, I'll be posting a follow-up video showing exactly where you would be able to lock in your gains. So stay tuned, subscribe to the channel if you're interested in learning more information, how to short stocks through buy and put options. So definitely subscribe to the channel and get more information. Short to top has been our top strategy recently as the markets have been reaching their all-time highs. We have been shorting a lot of stocks, even the best ones like Google and Amazon. When Amazon last week was just 1,600 bucks, when Google the other week, literally 4 days ago, was trading at $90 higher. So some of these market reversals, they do create some unbelievable opportunities. Now, if you've been trading options, but maybe have not been getting substantial gains, substantial results, it could be the fact that you may be trading options on stocks that barely move, that have no volatility. And for that reason, we actually have a list. Our watch list consists of 200-300 various stocks that are good products for trading options on. So if you're curious what these stocks are, definitely visit marketcrash.money, because you could be doing the right things, but you could be doing it on the wrong stocks and therefore may not be gaining substantial traction on your returns. Now, if you have been trading stocks for a while and you're looking to increase your gains and you may not know anything about options, definitely visit marketcrash.money. Money. Schedule your consultation right here. Click on How to Profit. Schedule your one-on-one. There's not going to be 100 people in the room. There's not going to be 100 people in the webinar. There's going to be none of that. Okay, it's a one-on-one consultation geared towards helping you reach your goal as a trader, whether you're a frequent trader, day trader, or whether you're a swing trader or more of a long-term trader or investor. We have various strategies for various people trying to accomplish various goals. Also, take a look at why the market crash 2018 could be a possibility, why Bitcoin crash could be still a definite possibility. More importantly, how to take advantage of the market crash before it takes advantage of you, whether you're a brand new trader or an experienced trader looking for new strategies. Take action now. Click right here, How to Profit, and schedule your consultation. Don't wait till tomorrow. The market opportunity right now is so tremendous. You could literally have the best year ever of trading stocks and options if you take action now. And if you were curious, how did Alan Greenspan do on his first testimony in front of Congress? Please take a look, as I have compiled a brief clip out of his testimony along with a brief clip out of Jay Powell's testimony on February 27, 2018. Take a look.
In substantial part about the problem of unfair competition, a federal subsidy that would be essentially used by the banks to compete unfairly. I guess that is a little different from what I have.
Can I just substitute? The answer is yes, but I have a more fundamental issue.
Okay, please continue.
The same views that lead me to like to see a freer economy are those views which also makes me very much disinclined to extend federal subsidies. And what I don't want to see happen is that the subsidy structure underlying the federal safety net not be extended beyond what the Congress very specifically constructed it for.
My time is...
I was kind of disappointed in your testimony, to be very honest with you. I didn't really find anything in there that gave me any indication where you all were going. So let me see if I can get you to be a little bit more specific. I'd like to know what kind of a structure you'd recommend. You're saying that you believe that the bank should be able to get into some expanded services. What kind of a structure would you envision?
Well, Congressman, if you found that my testimony was vague and not to the point, I regret that I was trying to do something close to that.
So you accomplished what you wanted to do.
I think well, you told me I have. I appreciate you telling me that I succeeded. And let me tell you the reason why. First of all, if you asked my personal views, I would be able to give them to you on all of the questions we've been getting up here. I'm not speaking for myself. I'm speaking to the Board of Governors. And when we come up with a proposal, I want to make certain that it is theirs, not mine. And as a consequence of...
Strong. While many factors shape the economic outlook, some of the headwinds the U.S. economy faced in previous years have turned into tailwinds. In particular, fiscal policy has become more stimulative, and foreign demand for U.S. exports is on a firmer trajectory. What we've seen is incoming data that suggests a strengthening in the economy. We've seen continuing strength in the labor market. We've seen some data that will, in my case, add some confidence to my view that inflation is moving up to target. Gradually reducing monetary policy accommodation will sustain a strong labor market while fostering a return of inflation to 2%. Engaging the appropriate path for monetary policy over the next few years, the FOMC will continue to strike a balance between avoiding an overheated economy and bringing PCE price inflation to 2% on a sustained basis. My personal outlook for the economy has strengthened since December. And again, each member of the FOMC is going to be writing down a new set of projections and a new estimate of appropriate monetary policy as we go into the March meeting, which begins 3 weeks from today. And so I wouldn't want to prejudge that new set of projections, but we'll be taking into account everything that's happened since December. Flattening of yield curves in the past has been a sort of a precursor of recessions, but largely because in many prior recessions, the Fed had to raise rates quickly to hold inflation down. That's not the situation we have now. It's very typical for the yield curve to flatten as short-term rates come up, as the economy strengthens, and I don't see particularly large. There's always a risk of a recession at any given point in time. I don't see it as at all high at the moment. In the committee's view, further gradual increases in the federal funds rate will best promote attainment of both of our objectives.